India's stock market capitalization has just surpassed Hong Kong's for the first time, reshaping the financial landscape. In this video, we'll dive into the factors driving India's impressive growth, the challenges faced by Hong Kong, and what this shift means for global investors. India's stock market has achieved a significant milestone by surpassing Hong Kong's market capitalization for the first time, marking a paradigm shift in the global financial landscape. As of the latest data compiled by Bloomberg, the combined value of shares listed on Indian exchanges has soared to $4.33 trillion, edging past Hong Kong's $4.29 trillion. This development positions India as the fourth largest equity market globally, with its value surging beyond $4 trillion for the first time on December 5th, with a noteworthy half of this growth occurring in the past 4 years. Fueling this unprecedented rise in India's stock market are several factors, most notably a rapidly expanding retail investor base and robust corporate earnings. The nation has strategically positioned itself as a viable alternative to China, attracting substantial global capital inflows. India's stable political environment, coupled with a consumption-driven economy that remains one of the fastest-growing among major nations, has contributed to its appeal as an investor darling. Contrastingly, Hong Kong has experienced a historic stock market slump, coinciding with a remarkable boom in Indian equities. Several factors, including stringent anti-COVID-19 measures, regulatory crackdowns on corporations, a property sector crisis, and geopolitical tensions with the West, have collectively diminished China's appeal as the world's growth engine. Evan Metcalfe, CEO at Global X ETS, emphasizes India's potential, stating, "We see India as the best structural growth story across not just emerging markets but worldwide." He attributes this optimism to India's demographic advantage, a surge in educated youth, and a progressive government actively pursuing key structural reforms. The downturn in Chinese and Hong Kong equities has been staggering, witnessing a collective loss of over $6 trillion since their peaks in 2021. Hong Kong, once a bustling hub for initial public offerings, has seen new listings dry up. Meanwhile, mainland China and Hong Kong equities have faced substantial challenges, prompting Chinese authorities to consider measures to stabilize the slumping stock market. Some analysts anticipate a potential turnaround, with UBS Group Age suggesting that Chinese stocks could outperform Indian peers in 2024, emphasizing significant upside potential in the battered valuations. Pessimism towards China and Hong Kong has deepened in the new year, exacerbated by a lack of major economic stimulus measures. The Hang Seng China Enterprises Index, a gauge of Chinese shares listed in Hong Kong, has already experienced a decline of more than 10%, extending a record 4-year losing streak from 2023. In contrast, India's stock benchmarks continue to trade near record high levels. Foreign investors, once enamored with the China narrative, are now redirecting their funds to India. A recent study by the London-based think tank Official Monetary and Financial Institutions Forum indicates that global pension and sovereign wealth managers are increasingly favoring India. In 2023 alone, overseas funds poured more than $21 billion into Indian shares, contributing to the S&P BSE Sensex Index 8th consecutive year of gains. Goldman Sachs Group Incorporated strategists echoed this sentiment, stating in a note from January 16 that there is a clear consensus that India represents the best long-term investment opportunity. This conclusion is drawn from the results of a survey conducted during the firm's Global Strategy Conference. In essence, India's ascent in the global stock market arena is not merely a numerical achievement. It reflects a fundamental shift in investor sentiment, positioning the country as a beacon of long-term growth and stability amid a changing financial landscape.